right, ladies and gentlemen, today we got Mr. Bill Mitchell on the podcast today. Second time guest. Thank you for coming on, Bill. Bill works at Palos Wealth Management. And before we get started, the views and opinions expressed in today's podcast are not financial advice. Want to make that clear. Bill works in the financial industry and compliance is strict. So want to get that out of the way first. So Bill, thank you very much for coming on again.
Happy to be here.
How was your weekend?
It was all right.
It was good?
Yep.
We had some beautiful weather here in Montreal. We both got to play some golf.
Yeah.
Bill was telling me he didn't play very well, but that's okay. That's why we love the sport of golf.
It's a recurring theme, unfortunately.
Are you going to be there for the President's Cup at Royal Montreal?
Absolutely.
Yeah? Are you going to volunteer?
I intend to.
Okay.
Hopefully inside the ropes. That's the place to be,
Yeah.
from what I understand.
Yeah.
Yeah.
How many people come from all over the world to go see a President's Cup, or is it mostly just Americans and Canadians that are there?
I think it's pretty well attended, and it gets bigger every year. 2007, I volunteered in 2007, and I remember at that time, I think it went down as the most successful President's Cup to date. Attendance was good. There's a lot of excitement. Being in North America as well as an international host.
Yeah.
It's in Americans, East time zone, so that attracts a lot more interest as well. But I've been to town hall at the club where they've given us an indication as to what the stadium structures will look like and the private boxes, and it's out of this world. It's way bigger than before. I think they're talking triple the attendance.
Oh my God.
And there's some really high-end boxes that are quite dear.
How much does it cost for a box?
I don't know. It's a lot. I mean, I'm trying to remember. I don't think 100,000 is out of.
I was just about to say it's probably in the six figures to get a nice box for the whole weekend.
I know there's one that's going to be located between the clubhouse and the 11th green structure, so sort of 10th to 11th green. You're familiar with the course.
Yeah.
5-star Michelin chefs from Montreal, air conditioned, high quality servings at the bar, and I think a private walkway between the clubhouse and the box structure, the private box structure. So it's quite impressive, and not to get too far into the golf thing, but what I'm looking forward to myself is the 13th hole is a par 3, 225. They're going to have a structure that will be similar to the, the wildest hole in golf at the Waste Management in Phoenix.
Yeah.
So the same idea with a stadium effect around the green. It's going to be crazy.
That'll be fun.
That's the place to be.
You ever been to the Waste Management?
I have not.
It's fun. I've been.
Yeah.
I've been on the 16th. It's a good time.
Yeah,
it's a party.
Exactly, and that's what I anticipate this is going to be like, and I think that they want that. So I know on my off days when I'm not required to be there to work, that's where I plan to be, is in that area for sure.
I hope you are there. And we got the Ryder Cup coming up this weekend as well.
Yeah.
In Italy.
That's right. Yeah.
I love watching the Ryder Cup. I think the Ryder Cup, especially when it's a competitive and a close match between the Americans and the Europeans, I would debatably say that it's more enjoyable to watch than the Masters. A good Ryder Cup is fun to watch.
I would agree.
Yeah.
Because let's face it, the President's Cup there's not the hate on. Not a hate on's a bit strong, but there's rivalries that go back quite a ways with the Ryder Cup, and people get pumped up. The players get pumped up. Sometimes there's a bit of controversy, big time.
They get nervous. They get it's always the same guys that that come through, and then some guys you can tell that they feel the pressure, and some guys rise to the top. Some guys you would never expect to do really well or hit that clutch shot, end up hitting the clutch shot to secure the victory. So it's always fun to watch, but you always feel bad for the guys when they need to make a shot and they like flub a chip or miss a gimme or something like that. It's the pressure must be immense.
I don't feel bad. I do that every time I go out.
Yeah. But so we got a lot to talk about today. More specifically, inflation in Canada. Some very interesting news that just came out this past week. The housing bubble. Some say there is a housing bubble. Some say there isn't a housing bubble due to supply constraints. oil prices. So we're going to talk about all that today. Let's get started on inflation. So what's going on with inflation in Canada?
The last 2 months, surprisingly, there was a bit of a bump up to, I think it was, don't quote me exactly, around 4% annualized.
Yep.
So it went up a little bit. Part of that is related to energy prices, which have been going higher, and we'll touch on that later. So as most people who follow financial markets will know, central bankers have been very aggressively raising rates in order to slow down the economy, slow down the job market, with the ultimate goal of slowing down inflation.
Yep.
Because rising inflation is not good.
No.
So inflation is still a problem. I think what the debate is right now is, where are we in the inflation battle? Like, rates have been raised at the most aggressive rate in the short period of time ever in history by central bankers. So that will have an impact at some point down the road. The thing is, it usually takes, depending on which economist you listen to, let's say 12 to 14 months is the lag between when you start raising a rate. So we're going to be right there in December, January. That will be the window when we should start to see the economic impacts impacting inflation, so inflation will start to go down. Now, again, it's not a precise science, but that's what people are expecting, is a softening of the economy. So I think the inflation battle, there are data points that suggest that inflation is going to go down. It's already going down. It's just not showing up in some of the numbers. So during this time period, central bankers have remained hawkish, in their speak as well as their actions, by continuing to raise rates to a point where, are they going to cause a recession? If they cause a recession, what kind of recession will it be? Recently, there's been an opinion floated that it'll be a soft landing. Now we're kind of pulling back from that. So really nobody knows. It's a guess. So if somebody comes on and says, an analyst or an economist, and says, oh, this is what's going to happen, they're just guessing. I mean, it's really a guess. It's not a perfect science. So from what I see, I think inflation is starting to wane, which is a good thing. We will start to feel an impact on the economy if that 12 to 14 month window occurs again. This time you're looking at December, January, February. And then at that point in time, central bankers will have to decide, if the economy starts to slow too much, start thinking about cutting rates. Because often things turn around really quickly in an economy. It takes a long time for higher interest rates to impact the economy, but when it does, sometimes it happens quickly. So this is the next stage of speculation, right? Is what's going to happen in 2023. Again, there's
2024.
2024. Sorry, there's things called dot plots where they predict the future movement of rates, and so, before it was maybe the third quarter of 2023. Now they're saying 2024. I think the Fed, particularly in the States, the central bank in the States, and Chair Powell, are talking a tough game, so that investors don't play as soon as interest rates start to go down, it's like buy. It's time to get into equities. I don't think they want that kind of speculation. So I think that's why they've been using language that's kind of tough, saying that we're going to stay, rates will stay higher for longer. That's kind of the theme that's being floated right now. And that could happen.
Do you think we're going to have a hard landing or a soft landing?
I'd be guessing. As I said,
it's a fun game to play.
It is. How about if I go right down the middle somewhere?
Down the middle?
Yeah. I look at it kind of like a tropical storm. It was a tropical storm coming. Is it just going to be high winds, or are we going to see some destruction? We don't really know. That remains to be seen, and then they'll react accordingly. I think it's plausible that the economy really starts to slow down quickly, and then they're backtracking and starting to lower rates. Because a lot of this, in my opinion, has been about the credibility of central bankers and the Fed. They kind of messed up by keeping rates too low for too long.
Yes.
Predicting that rates were not going to start going up until 2024. They were absolutely wrong on that. I mean, rates...
Well, they told us too.
Absolutely. People acted on it, people bought houses and stuff like that.
Well, remember when Tiff Macklem, he specifically said rates will be low for a very, very long time. Yeah. He said that specifically. That's, I would say, the biggest reason why Canadian real estate is so out of whack right now and how it's so expensive. He went on air saying rates are going to be low for a very long time. Don't worry about it, which is, like you said, it's a buy signal for real estate in Canada. And people did that, and look what's happening now.
Yeah.
There's a quote. So I was listening to Larry Summers. He went to the All In Summit. This was a week and a half ago, and he's obviously a very smart man when it comes to financial markets and the economy and stuff like that. And he had this quote. So he said it was about whether, because they asked the same question. They said, "Do you think we're going to have a hard landing, or do you think we're going to have a soft landing?" And he goes, "What Samuel Johnson said about second marriages is true of soft landings. They represent the triumph of hope over experience." So, and so he was basically saying, but he said the exact same thing as you. He goes, "I don't know for sure. I recognize that." What did he specifically say? "I realize that there's a lot of things that I don't know." And he seemed to be more in the camp that we're most likely going to be getting more of a hard landing, but he did make it explicitly clear that, look, I'm not 100% sure what's going to happen, obviously, and anyone that does say they know what's going to happen doesn't know what they're talking about either. But I don't know, I just feel like there's so many data points, and let's just be specific to Canada here. There's so many data points pointing to the economy slowing down. I think we have a really, really, really big problem coming with regards to the real estate market. If you look at consumer spending has been dropping significantly. And if you look at consumer spending per capita, that's dropped off a cliff. And a lot of times, because I've said this before, with all the immigration coming in, it can paper over kind of aggregate consumer spending. Consumer spending per capita has been dropping a lot. And I didn't know this. I was reading this up just before our meeting today. The average mortgage rate in Canada right now, I'm not talking about renewing your mortgage, I'm talking about the rate that people are actually still paying right now. It's still only 4.3%. This is as of the end of June of this year. So to the point you mentioned earlier, what's going to happen when the interest rates actually work their way through the economy and work their way through to people actually renewing their mortgages? It's going to be interesting. And a lot of people cannot afford, if they're paying $3,000 a month on their mortgage right now, and all of a sudden their mortgage rate jumps up to $4,500 or $5,000 or $5,500, I mean, that has to have an impact on where real estate prices are heading. And I know we have supply constraints, but if no one can afford the home they're living in and no one can afford to buy a new home, I mean, something's got to give. What do you have to say about that?
Yeah, I mean, that's what adds plausibility to the harder landing scenario.
Yeah,
is to me the obvious headwinds that are out there. It's not only the issue of in Canada with variable rate mortgages, but a fixed payment where we've talked about this before. You get to reverse amortization where people are not even paying down principal. As a matter of fact, the mortgage,
it doesn't even cover their interest.
Yeah, the principal owing is getting larger.
Yep.
Over time.
Yeah.
This is probably sustainable for a short period of time, but at some point the banks won't put up with that forever. You just can't keep that sort of, game going where you're increasing the amount owing on a home. Now, let's just say we reach a point where affordability causes more supply because people are forced to sell at one point. Mm-hmm. So prices go down. So now you've got the conundrum of prices going down and your mortgage is getting bigger. So the equity that's in your home is going down. That's one thing. Credit, like right now, credit card balances owing, I think in the States I read, are over $1 trillion,
huge,
largest ever, with rising rates.
Yeah.
So I don't, I imagine, I've read that people are kicking the can down the road, basically. Grocery prices are going higher, gasoline prices are going higher. What do? You use your credit card.
Yeah.
That can be a stopgap, but at some point you've got to pay your credit card.
Yeah.
Then there's the argument that, well, people still have surplus balances in their bank account from COVID, right?
Yeah.
From stimulus packages, and people weren't spending as much, but they're spending now. Part of that being the COVID revenge spend, right? People want to go on vacation, no matter what it costs for a hotel or a flight. People want to get out of Dodge because they weren't able to do it during COVID.
Yeah.
So then there's employment. What happens if the economy does take a turn and people start losing their jobs? That obviously has an impact on the economy. So again, in a way, it's a guessing game. Like, where are all of these pieces going to land in the next 6 months? We don't know. It could change rapidly. Like I said, usually it's 12 to 14 months following the first rate hike when you start to see an impact in the economy. So it's troublesome to think of. Recently, the Canadian real estate market was referred to as the mother of all real estate bubbles.
Was that the article in BNN?
Yes.
So there's what was the term used? It's a credit bubble on top of a housing. A housing bubble on top of a credit bubble.
Yeah,
I think was the term that
I think
used.
Colgan. I think his name's Colgan. I think he was the. I could be wrong on the name. It's close. Was the economist who had made that call.
Do you agree with his assessment?
It makes sense. All of these things together make sense. A slowing economy is going to have an impact. I remember the housing crisis in 07, 08 when, when prices fell through the floor.
Yeah.
It becomes a domino effect.
Yeah.
So in Canada, part of the argument has been, well, immigration is causing demand, and there's limited supply. So there's two things that would, support the real estate market staying healthy.
I actually have some points. I'm just going to interrupt you there for 2 seconds. So there's the guy's name, Jeff Thomas. I don't know him personally, but it was an interesting point of view. I saw it on LinkedIn. So Jeff Thomas of Kingset Capital. And he was just highlighting the difference between the Canadian and the U.S. housing market. There certainly are differences between the two. The biggest one being they have 30-year fixed mortgages, and we have basically every 5 years. I didn't even know this actually, but generally speaking, it's every 5 years you get to renew your mortgage. Apparently, there are 10-year mortgages. I wish I knew that when I got my mortgage 5 years ago, but I didn't. But here, just to highlight the differences between Canada and the U.S. So in Canada, we have 10x the immigration compared to the population. This is obviously going to have an effect on supply. He says, we don't move around like Americans do. That's true. We tax housing more than the U.S., where permits and taxes might be about 5% of total cost in the U.S. In Canada, it's roughly 30%. Crazy when you think about it. He goes, Canadian urban centers, where most of the population and demand resides, have some of the slowest approval timelines in the world to give out permits. That's true. And then he basically just says, in short, supply lags, demand is strong, and the customer is sticky. So there are arguments on both sides. You have the real estate guys saying, I don't think that the bubble we have right now is going to be that much of a problem because of the supply constraints and because we have a sticky customer. And then you have other people. I'm in the camp, and I'm not sure what camp you're in, but I'm in the camp as well, that says, well, eventually I think market forces are going to take over. If you let interest rates, if the average person is still only paying 4.3% on their mortgage, and you let interest rates actually work their way all the way through, and the foreclosures actually start to take place, because it's not like if someone can't pay their mortgage, it's not like throughout the next month. It takes up to a year apparently to get the person out of the house. This is going to take time to work its way through the system. But I just keep thinking, like, yes, there's a supply constraint, but no one can get into the new housing supply. Put rentals aside for now. I'm talking like strictly housing. Yep. And if we look at 2008, what percentage of the market foreclosed? It wasn't that much. It wasn't like 7% or 8%.
Canada remained healthy.
But in the US, what was it? I think it was 8%.
I don't know the number off the top of my head. I do know a lot of it was caused by leverage.
A lot of it was caused by leverage, but I'm talking just specifically, forget like taking up the mortgage-backed securities and selling it on the market. I'm talking like just the housing market itself. I don't think, I'm almost positive it was under 15% where people are actually foreclosing on their homes. It wasn't like half the population was all of a sudden they couldn't afford it.
That would make sense.
Yes.
Yeah.
So it's like, when I look at kind of the picture what's going on in Canada, I look at it and go, we could easily have that problem, especially if the banks go, okay, if your mortgage, the new mortgage rate that's retriggering right now, we're not going to let you do this reverse amortization mechanism anymore. If you're paying $3,000 and you're supposed to be paying $5,000 a month right now, too bad, you got to pay it. And I don't know, we'll see what's going to happen. What are the politicians going to do? They're going to want to save their ass. They're going to say to the banks, no, you got to keep reverse amortizing. Of course they're going to say that. I'm sure they're already in their ear saying to do that. Like Chrystia Freeland, I can guarantee you, is going to walk in there and try to get them to kick the can down the road.
Well, they're going to say whatever increases their odds of them being reelected.
That's a good way to look at it.
There's differences. Other differences between Canada and U.S. is the 30-year mortgages in the States.
Yeah.
If you've got a set rate that's fairly low, you just don't move.
Of course,
you stay put, and interest is deductible. on your principal mortgage as well in the States, which we don't have in Canada.
I wish we had that. That'd be nice.
Yeah, it would be nice. So, I mean, who knows? Who knows? Hopefully we don't have that hard landing in real estate, because it's terrible when you see families, under that type of duress where they're going to lose their home.
But wouldn't it be a good thing in the long run for the Canadian consumer if that we did have a hard landing and the real estate market did reset? I mean, there's a lot of people, a lot of my friends, imagine a 25-year-old. If you're 25 years old making $100,000, even $150,000 a year, you're probably not going to be able to afford a home or get into a home unless your parents give you money as a down payment. I was speaking to one of my real estate buddies, and I asked him that question. I said, of all the, he's a millennial. I said, most of his clients are millennials. I go, what percentage of houses that you are purchasing or the clients are purchasing do the parents give the down payment? He goes, almost all of them.
Yeah.
Unless you're making a lot good coin, you have a really good job, or your parents help you, I mean, you can't get into the housing market. So just back to the main point, yes, in the immediate term, it would be an issue if we had a hard landing, but I think longer term, it would be good for the country. Like the country in Canada, I'm speaking about, we haven't gone through that deleveraging process that the Americans went through in 2008. We haven't had that yet. And I think it would be healthy long term to have that and kind of just reset things. I mean, it's crazy the amount of debt people have.
Absolutely.
People are stressed.
Yeah, it's difficult to reset this. There's such a shortage of places for people to live.
Yeah.
And yet we keep increasing immigration. Something has to be addressed there. It is ludicrous. Where do you expect people to live?
It's ludicrous. I know.
So, again, that's politics. Immigration is good in one regard for Canada, but as far as housing people, it's not such a pretty picture. So there's a lot of work to be done, depending what numbers you read, how many millions of homes are actually needed to house the population moving forward. It's pretty scary.
And they just made Stats Canada made a rounding error. They were off by a million immigrants, I think, over the past 2 years. So more or less, in short, they went, oops. So it turns out there's actually 1 million more people than we thought. I mean, just sheer incompetence. And people go, well, if you look at it in the grand scheme of things, it's only a 2 or 3% error. It's like, dude, 1 million people, we need housing units. We need housing supply, whether it's rental or people to buy houses. That's a big mistake. This is incompetence. This is crazy.
Yeah.
I don't know. I guess my conclusion, my hypothesis is I think we're in for a hard landing in Canada. And then, so here's the next question that I have for you. Let's just play this game. I love playing this game. It's kind of like it's having our crystal ball. And then again, what the hell do we know? Would you agree with the fact that the American consumer right now is healthier than the Canadian consumer?
I think both are stretched with credit, but it's also in American culture to spend more than it is in Canadian culture, right? Canadians don't shop with the same enthusiasm, let's say this, as Americans. I mean, the consumer is what drives the American economy. I think Canadians are a little bit more reserved in terms of spending money on things that we don't really need, although we're learning. I mean, Black Friday's in Canada now. We never had that before. All of a sudden it's a Canadian occasion now to go spend money. So I don't know. I really don't know the answer to that question as to, but in my opinion, I would think that the U.S. consumer certainly spends more than the Canadian.
Yes. What I was going to say is I think that the American consumer is slightly, not a lot, but slightly healthier than the Canadian consumer. Why? Just because of the housing aspect. So if you're stuck in a 30-year mortgage, yes, you're not going to move, but you have a 3.5% or 3% mortgage rate for the next 30 years. That's a lot different than Canada versus someone who's stressed that they have to renew their mortgage next year and they know their monthly payments are going to go from $3,000 to $4,500. So anyways, that could be open for debate. But what I was going to allude to is if the American consumer is healthier than the Canadian consumer and the Fed keeps raising rates, which I think they will, Bill Ackman would agree. I want to get your opinion on that after. If the U.S. keeps doing it, because the Canadian central bank more or less has to follow what the American central bank is doing unless we just want to absolutely destroy our dollar. Is that correct?
Correct, yeah.
I think that this is again just where I think why I think we're going to have a hard landing is because the Fed is going to keep increasing rates, and the Canadian central bank isn't going to have the choice. We're going to have to follow, which will break our economy even quicker. That's basically my hypothesis why I think we're going to have a hard landing. And it feels like whenever Powell is talking that he's actually serious about keeping rates higher for longer. And that's just my next point. So Bill Ackman, I'm sure you saw this in the news as well. So he's shorting the bonds right now just because he does think that rates are going to be higher for longer. Would you agree with his play?
The central banks are saying they're going to be higher for longer. That's the message that they keep ramming down our throats. The only pushback I would have on that is, are they being honest with us? Like, are they?
It's a great question.
They could have no choice but to start cutting rates if the economy really has a hard landing. Then you start cutting rates, right? Because you've gone too far, which is what tends to happen. They go too far, because they're not seeing the results right away that inflation is going down. It takes time, but we're impatient. We're an impatient species. So, the signs aren't there. Arguably, they're not there, but they are there. If you look underneath the numbers, there are signs that inflation is starting to go down. But it's not like you flip a switch, right? Like when the economy starts to go down, when there's less capital spending, companies are pulling back on their budgets. It all translates into fewer jobs down the road, less spending. It's a snowball effect, And I sort of have a hobby where friends that I have that are in business or guys I golf with and stuff that are in certain sectors of business, I ask them how's it going? Like, what are you seeing? Lately I'm seeing, some comments like, yeah, we're down like 15% this quarter. Things are slowing down. The order book is kind of capped out and it's not renewing itself moving forward. So just that, again, that's real boots on the ground, very small, myself talking to somebody who knows stuff about their industry, just getting an opinion that way. So that points to slowing for sure. Yeah, Ackman, I don't know. He's been right many times in his career and wrong many times in his career.
Yeah.
So I don't know. But at some point I would suspect, and interest rates, by the way, they're basically back to where they are historically, right?
Yeah.
Like 4.5%, 5%.
Yes.
That's where they've been, I think, for 3 centuries or something like that.
But there's a lot more debt in the system today than there was.
Yeah. Well, there was no debt back.
Yeah.
My parents, I don't remember them having debt other than the mortgage. Or car loan.
But then what happens so this is another thing that Chamath Palihapitiya, he always brings up as well. So he doesn't deny that, yes, there's a severe debt problem in the financial system, in the global financial system, but he's like, so what? He goes, yes, America has a lot of debt. The debt to GDP is very high, but he goes, so is everyone else.
Yeah.
So how does that impact what central banks are doing with interest rates? If everyone has all this pile of debt, I don't. It's not really a question I'm asking. It's just I don't understand fully. I know it's complicated to understand. It's just like
it is hard to wrap your head around the whole debt thing because
everyone just has debt. So it's like, so what?
Yeah.
You know what I mean?
Everybody has debt.
Yeah.
The higher rates go, the more expensive it is to service that debt.
Yeah.
So the debt bubble just keeps getting bigger and bigger and bigger. At what point does it burst? Does it ever burst? I don't know. I don't think anybody has an answer to that.
Well, I think that's where just governments or central banks just monetize the debt.
Yeah, absolutely. You devalue your currency.
Yeah.
Which is hard for the Americans to do right now because it's a safe haven currency and it just keeps going up.
Yes.
Against world currencies. So I guess that's a good thing for Americans. Yeah, I don't know what the answer is. It's something you think about, over a couple of beers and it's like, where are we going with this debt thing? And it is a bit spooky. You can even read some arguments that we don't use debt like too close the capacity we could use it to. We need more debt, which is kind of mind-boggling to say, there's room for a lot more debt.
MMT guys or something.
Yeah, the modern monetary theory, more debt. Why not take the other side of the argument?
Yeah. because I just, yeah, anyways, it's like my brain sometimes explodes just trying to think about it, because it is a really good point, because you have one camp that's saying, look, we're eventually going to have to pay the piper one day with all this debt. And then Chamath just looks at the other side of it. He goes, I don't worry about that stuff. I worry about like what's in front of me right now. And he goes, even if you look at China, you look at other countries, and you look at Japan, I mean, these guys have piles and piles of debt as well. So he goes, so what? What does this even mean? And his theory is, he goes, yeah, I would agree. I think in 10 years, debt will be higher than what it is today. How do I make money on that if that's going to be the case?
Yeah.
So if interest rates, let's just take the scenario where interest rates do stay higher for longer. Is this good for your portfolio, or is this bad for your portfolio? And I know that your fund has been having some pretty good success this year. Are higher interest rates good for your fund or bad for your fund, or it doesn't matter? You just learn how to kind of play the game.
Well, it's I mean, you know, I'm an active manager, so I think we've talked about this before. I go to where the puck's headed.
Yeah.
You know, so I have the mandate to invest wherever I think the best returns are going to be. So I can adjust pretty quickly to changes that I perceive, and trying to figure out ways to make money or to, you know, alleviate risk. So it doesn't really matter. I mean, there's sectors that perform well when interest rates are high, and vice versa. You know, real estate, I've avoided real estate, quite frankly, and utilities exposure for the last year and a half, because of interest rate sensitivity. But a point will come when these companies become more attractive. As a matter of fact, I shouldn't mention single names. Let's just say I picked up a well-known Canadian telecommunications company recently because the yield was 7%.
Yeah, that's nice.
And you know, it's a solid, stable company. 7% is a pretty attractive yield.
Yeah.
Which makes me, you know, think that the price depreciation in the stock has been pretty extreme this year. So to me, that's the type of active management where I'm going to go and pick up something because I think it's relatively cheap to its history, and eventually things will change, and the stock price will go up again.
I have a question about Canadian companies while we're talking about this. So for the grocery companies right now, because there's, you know, the food costs are going up for Canadians. It's becoming political. You have what's his name there? Our Prime Minister. What's his name?
I forget.
Talking, you know, threatening, not saying maybe we're going to tax you guys if your profits are too high. But right now, so the grocery chains, so Metro, IGA, Loblaws, they have super high profits. I'm just curious though, like why are their profits higher right now versus, let's say 3-4 years ago? Like, why are they higher? And the reason I'm asking this is sometimes, you know, I am a capitalist. I believe in market fundamentals, and my argument is always like, okay, guys, they're making too much money. It's like, okay, guys, but capital is going to go to wherever it's going to give it the best return. If they can make that return, they're going to make that return. But then you have the other side of it where they're saying like, well, they're gouging the consumer. And I'm always kind of caught between a rock and a hard place. Do you have any insight into why their profits are going higher? Are their margins getting higher? Is it the profits and the margins getting higher? Or is it just like, what's going on with the grocery chains right now in Canada?
Well, I don't think they're making exorbitant profits. I mean, with inflation, I guess you have some pricing power.
Yeah.
And I'm sure there are parties, whether it's a food manufacturer or a retailer, they could probably take advantage of that. But people like to paint the grocery stores, the grocers, as the bad guys.
Yeah.
You know, they're gouging us. I don't necessarily agree with that argument. I think there's a lot of factors that are impacting food inflation.
Carbon tax.
Yes, that's one of them. Absolutely. Cost of fuel.
Yeah.
Cost of everything. Packaging expense, like packaging laws, consumer laws. There's all kinds of stuff that increases the cost of food. So these are things that are probably the true source of higher prices, as well as inflation and interest rates. It all mixes into higher food prices. But I don't think you can blame the grocers, because now there seems to be, you know, politically, it's convenient to say, well, we're pinning inflation on the greedy grocers. I don't think that that's completely fair to do that. And then you start hearing, well, we need, like I vaguely remember because I was young, price and wage controls when inflation was out of hand, I guess in the 70s. I was very, very young. And then they start talking about that again, about having control on prices or whatever. Like that doesn't work. A government intervention into any industry, it doesn't work.
Why doesn't it work?
It's because it takes away competition, it takes away innovation, takes away incentives.
Price discovery.
Yeah. I mean, the cure to higher prices is greater supply.
Yeah.
If you start having the government manage it, then it's a monopoly, and it's not an efficiently run monopoly. And if you look at any endeavor that government has got involved in, business-wise, it usually ends up a bust. Healthcare in Canada.
Yeah.
Things like when Air Canada was a government corporation, when CN Rail was a government corporation, I mean, they were basically terrible. They were terribly run.
They can't do anything properly.
No, but now that they're privatized, CN's a great company. Air Canada still has issues, that we all hear about lately, about missing luggage and, delayed flights and so on and so forth. It's funny because a lot of that might have to do with the fact that airports themselves are government run. So maybe it's out of Air Canada's hands. I don't know. But when it comes to food, I mean, you have to let market forces play itself out. I mean, prices will go down.
Yeah.
But you can't start to manage it, like from the government perspective, to manage it to keep prices down. That's not going to work in the long run.
But would they actually go down? And I think I'll play devil's advocate just a little bit here. Would they actually go down when there's this strong of an oligopoly in Canada? So it's just, if there's no supply of actually competitors, and by competitors I mean other grocery chains that can come into the market and basically, because how capitalism would work, this is for the viewers, if there was money to be made and there was companies, the grocers, that were gouging the clients or the consumer, another grocery chain would come in and say, hey, you guys are making an example, 20% margin. I'm going to come in and make 15% margin. I'm still going to make a lot of money. I'm going to gain some market share. That's how capitalism would work. But with an oligopoly, I mean, you basically have Loblaws, you have IGA, you have Metro. I mean, here in Quebec, it's basically Metro and IGA. These guys run the whole market. Everywhere you go, you have one of those,
or Loblaws.
Chains.
Loblaws probably goes.
Loblaws too. But so if you have an oligopoly, and Canada loves oligopolies, we got it in banking, we have it in insurance more and more, we have it in grocery chains, we have it in telecom. We like oligopolies. We love having compliance and all this kind of crap that I hate, but it's, Canadians like that.
Yeah.
So just back to my question, if there's an oligopoly and there's not a big supply of competitors, isn't it a fair argument that they could say they are gouging the consumer and that price controls might actually help make a difference?
I don't think the price controls will work. That's where where I stand. Close to home, I mean, like I happened to go by a local Walmart in the West Island.
Yeah.
They're revamping the entire grocery department, the one on St. Charles and Highway 40. So I went in there to pick something up, and I was like, okay, they've moved the groceries somewhere. So I went to the back of the store. They've upped their game. I mean, everything's new floors, new refrigerated areas. And one thing that struck me was it looks a little bit like Costco. Because, you mentioned like the traditionals, right? Like Metro, Loblaws, Sobeys, but then you also have to incorporate now Walmart, Costco. I mean, they're selling groceries now, and I was interested in this change at the local Walmart. So I went in to pick up like one item. I think I left with a cart full because I'm a little bit of a price conscious shopper. My wife would call me a frugal cheapskate, but I prefer money in my pocket than the grocer's pocket.
Yeah.
So I started looking around, and I was like, the prices are pretty attractive at Walmart. So I guess I'm giving a shout out to Walmart. So now
it's a free plug for
I'm
Walmart.
Leaning towards going to Walmart more than my traditional grocer that I've been going to for a long time and support it because I really like the store. But at the end of the day, if certain products are a lot cheaper at Walmart, and they're Canadian made.
Yeah.
You know, I debate this with a cousin of mine who's anti-Walmart, you know, because everything's made overseas. Well, I don't buy stuff that's made overseas at Walmart. I buy stuff that's made locally, made in North America, mostly grocers and toiletries and stuff like that. But there's, I guess, Walmart stepping up to improve their game and selling local produce cheaper than you'll see it in other grocers. That's my observation.
I'm gonna go check out Walmart.
Yeah, it's not based on anything more than what I noticed.
Yeah.
Literally this past week when I went in there.
And they have fresh produce, fruits, vegetables. You can get all that stuff too. It's not just packaged goods.
It's an impressive grocery section now, and they're still under reconstruction. So, you know, right now it's sort of split between two different areas of the store, but you can see that everything is moving to the back, and it's like the one in Point Claire is already at that level where it's a really large grocery space. And now the one in Kirkland is catching up. But there's another entrant, arguably. They're not stupid, Walmart.
No,
they see an opportunity in groceries, and they attract price conscious shoppers.
Yep.
So they're going to take market share away. So there you have capitalism at work, right?
That's a great
oligopoly. The oligopoly are going to start feeling the pain of Walmart.
Yeah.
So what do you do? Lower your prices.
You got to drop your prices.
Yeah.
You got to shrink your margins.
So there's capitalism at work, in my opinion, from a very
street
level view, which is better than saying we're going to cap the prices you can charge, because then you're going to end up with, you know, emptier shelves. You know, that's what's going to happen.
What's your opinion on? What's your forecast for Canadian banks moving forward?
I mean, you know, they haven't done well.
No.
This year.
No.
And so, you know, back to your point about the Canadian consumer and the Canadian economy versus the U.S. economy. I mean, if the stock market tells the story, I mean, Toronto, the TSX S&P Composite Index, which is Canada's benchmark, I think is up. I mean, it's been a tough couple of weeks on both sides of the border in markets, but I think the TSX is up like 4% this year. S&P was up 17, NASDAQ was up more than that. So if our stock markets are telling the story, then yes, the Canadian economy is hurting a lot more than the U.S. economy. Now, it's a different economy, right? We're more economically sensitive.
Yes.
But if you ask yourself, the banks, why have the Canadian banks, which are traditionally the most conservative, best run in the world, why are they underperforming? Although U.S. banks are underperforming as well on the heels of the crisis that we had in the spring. But yeah, it sort of concerns me a little bit.
What are they? So if the TSX is at 4% year to date, what are the banks at?
Well,
generally?
Banks are down. Again, don't quote me exactly. 20%.
Oh, geez.
This year. So
okay.
The dividends are there. I mean, they keep growing their dividends.
Yeah.
But it just makes me wonder. Like when I see that happening in the market, the financial markets tell you. They project what's happening in the future, right? So we've had this discussion many times.
Yeah.
They're the greatest tool for predicting where the economy is actually going to go, which when you look at, just to rewind for a second, 2022 was a terrible year in both stocks and bonds. That was maybe telling us that 2023 is going to be a tough year and maybe 2024. So that's the predictive nature of financial markets. So yeah, so back to the Canadian banks. What could upset the apple cart? Is it real estate? Is it credit? Is it a stressed borrower? I mean, all of these things could be the rationale as to why the banks are not doing well. You know, so once the banks start doing well, doing better, maybe bottom and start going up, that will tell us what's going to happen.
What
9
happens
to 12 months down the road, right? They're great predictors. The markets are great predictors of what happens in the future.
What happens to the banks if we actually do get an Armageddon scenario in Canadian real estate?
So from what I've read and what I've heard, banks will accept, again, like reverse amortizations for a given period of time. They won't accept becoming holders of real estate because people are defaulting on their mortgage payments. So they will at one point say, that's it. Enough is enough.
We're
not supporting. Yeah, exactly. Yeah. So that's not what they want, right? The banks want to have that.
The interest. They make money on the interest.
Yes,
yeah.
But not to a point where it's damaging the economy. So again, it remains to be seen. A lot of this is tied to what happens in the real estate market in Canada, as per the discussion we just had a few minutes ago, right? Like, is it going to be supported by shortages of supply and immigration? And if interest rates start to go down again, affordability will improve. But right now it looks like as people go to get a new mortgage in 2024, 2025, there's going to be sticker shock. Sticker shock.
And these people, think about that. If you got a 5-year fixed rate mortgage in 2020 during COVID, was COVID 2020 or 2021? I don't remember anymore.
Started March 2020 was
Anyways,
when,
but that was like getting close. I think the peak was March 2022 for Canadian real estate. But all I have to say, these people getting a 2.5% mortgage, if rates are at 6% or 7%, they're not going to be able to afford their home.
That's my thinking.
No chance.
That's my thinking. I don't care how many immigrants you have lined up to buy a home.
Well, they can't afford to buy the house.
Yeah.
And you know what I mean? They need to go get rental properties.
There's numbers out there that change weekly. The number of Canadians that are, variable mortgages that are reverse amortization right now, I don't know, is it 40% or something? Don't quote me again exactly.
There was
it's a high number.
A year ago, I know what the number is. So a year ago, the big ones, because Scotia doesn't do variable rate, and there's another bank that doesn't do it. TD does it, and I want to say CIBC do it again. Let's just go to TD. I know this for sure. A year ago, the percentage of clients that had over a 35-year mortgage was essentially zero. This was just a year ago, and today it's 23%.
Yeah.
And for those that are listening, if you have over a 35-year mortgage, you're basically in the negative amortization period. And some people are having 50, 60. These are like the horror stories.
Yeah.
50, 60, 70, 80, 90-year amortization, which essentially means the bank just became your landlord. But as you said, the banks don't want to be your landlord. They want to lend you money and get out of there. They
don't want to be in the real estate business.
No, they're not in the real estate business.
Not yet.
I mean, I think because everyone just keeps going, the Canadian banking system. We have the best banking system. The best banking system. I will say we do have a good banking system, but everyone thinks like we've never had a crash. We've never had a crisis in Canadian banks, and people think because we've never had a crisis that it will never happen. And if you look at, it's definitely not a 0% probability that one of the banks or several of the banks can have severe stress over the next 1 to 3 years. Like it's not a 0% probability.
I agree.
People think it is.
But what happens if
I don't know, man. I want to talk about this. That's why I'm asking you. You're the pro.
It's called the government.
So they're just going to print a bunch of money. But if they print a bunch...
They have no choice but to bail the bank. If the banks were really in a crisis in Canada, the government has no choice but to bail them out.
But if they print a bunch of money, that's going to cause rates to go down. What's going to happen if the Fed keeps their rates up? We're fucked.
Yeah. Well, now we're getting into what if. But the one thing you can take to the bank, so to speak, no pun intended, is that if they get into a lot of trouble, the government will make sure that they get out of trouble, one way or another. They'll change the rules. You have to for the survival of the country. We have 6 banks basically.
Yeah. I know they're going to do it. I'm not saying they're not going to do it, but what I am saying is that if the Fed keeps everyone knew that when the Fed was going to put interest rates up, it was going to break something.
Yeah.
We had the SVB situation. China didn't want the US to be raising rates. People knew that stuff was going to break. A lot of economists, not economists because they always say that everything's all rosy and perfect, but for people that actually work in the markets, a lot of them say we still think something else is going to break if they keep rates at this level or put rates up even more. So if we have a crisis, a banking crisis here in Canada, and the Fed's okay, everything's still more or less stable in the United States, if we have to bail out these banks, really bail them out, correct me if I'm wrong, we're going to have to print money to keep the interest rates down. If we print money, it's going to devalue our currency, and it's going to hammer our currency even harder than what it's getting hammered already because the U.S. is raising their interest rates. Is this a correct assessment?
It's all part of the mix, yeah.
Okay.
Yeah. I don't know if they would print money to help the banks. They would just put in some sort of legislation to help the banks through a difficult period.
But we don't have any money.
Well,
where would they get the money?
The government can print. I guess back to printing money.
Yeah,
the government can decide whatever they want to do. It might impact the value of the Canadian dollar. It might impact our reputation globally. which by the way is tumbling.
Oh God.
In terms of, this is another interesting report that I read recently, in terms of productivity and investability in developed nations, we're getting pretty close to the bottom, which doesn't paint a pretty picture for the next 10, 20 years in Canada unless we right the ship.
Yeah.
And a lot of that has to do, in my view, with
government overreach.
Yeah.
I totally agree.
Yeah. I don't want to make this a discussion about politics.
No,
I'm not supposed to talk about politics really, but
no, I agree.
But it's something that
it does well
me,
to get clips.
Well, you know,
we don't have to talk about it.
We could no, but it impacts the economy and economic activity and productivity. It all, you know, energy. I know you want to touch on energy.
Yeah, we'll get to energy next, but it's just one thing. People need to understand that. Because when a country is less productive, a lot of people just go, oh, what does productivity have to do with anything? You're just thinking about money. Yes, money is part of productivity, but having high productivity in a country allows our country to have the welfare state that it has today, to fund the welfare state, to fund social programs and all the stuff that, you know, that governments invest in. We need to have productivity. That money needs to come from somewhere, and people need to understand that, and not enough Canadians understand that. And if we keep dropping in productivity versus the United States, I mean, 20 years ago or 25 years ago, we were actually catching up to them in terms of productivity, which is more or less its GDP per capita and stuff like that. I totally agree with you that we do have a productivity issue, and if it wasn't for, I heard this as well the other day, the GDP numbers that came out for Q2, which was negative 0.2, I believe, in Canada. I know it was negative.
Yeah.
If it wasn't for rentals, like rental units, and the construction of rental units, and public sector hiring, government jobs, which take away from productivity as well, that number would have been a lot worse than negative 0.02.
Yeah.
It's not good.
No, I mean,
not good.
This is where I think, you know, if I look at Canadian society, I think that most people have a very naive understanding of how the economy works, right?
I would agree.
If your productivity is improving, you're going to draw investment because dollars will go to where they're going to earn the highest return. If we don't have better productivity than other nations, you're not going to draw that investment. If you don't draw that capital to the country, there's less money being spent on innovation, improving, which at the end of the day ends up with fewer jobs and less lucrative jobs. So the wealth of the country starts to go down. And this is where we all feel it. No matter who you vote for or where you work or what your thoughts are, we all hurt when the economy is decelerating, and we do well when things are getting better. I think we have to have a approach in Canada to try and draw investment, not discourage it. And we've done a lot of that, like discouraging investment. A lot of it having to do with things such as climate change, which I understand. We could talk about that for the next 24 hours if you like as well. On my opinions on that, right? So
this is a perfect segue. We can kind of go into oil now, but continue what you were saying.
No, but I mean, you know, we have to realize that like things like productivity and attracting investment are good for all Canadians. Yet we seem to have this shoot ourselves in the foot approach to it, often coming from government, that we're not going to do it this way. We're going to make it hard. We're going to put in more regulation. We're going to make the cost of investing here higher. Well, I got news for you. Those dollars are going to go elsewhere. And there's lots of places for them to go now. They'll go to Vietnam. They'll go to India. They'll go to the States. They'll go to Mexico.
Saudi Arabia.
Absolutely. Mexico. Like, you know, we're in competition with Mexico now, really. And the Mexican peso is on fire. Mexican economy is doing really well. Their stock market is doing really well. It's softened lately, but that's where investment's going to go. If you make it too difficult to build a car in North America, like Canada, US, you're going to build a plant in Mexico. That's where the money is going to flow. It might take 10 years, but that's where it's going to go. Right now, you're looking at the auto strike, the auto worker strike going on in the States, and you know, more power to them because the amount of money that the executives are giving themselves is obscene compared to what the guys and girls working on the Ford shop are making. But if you push too hard and you ask for too much, those plants are going to relocate to a more labor-friendly state, which has happened, right? Like Tennessee, South Carolina, they make cars there now.
Asking for a 4-day
it's a
work
right to
week,
work state.
Yeah, asking for a 4-day work week are absolutely absurd.
Yeah.
It's just going to accelerate them moving the production outside of Detroit and outside of other places in the United States. But I will say, I get both sides of the argument. I will say, though, the semantics aren't very good when the CEO of Ford is negotiating from his home in Acapulco with blue-collar workers. Yeah. That does not look good. And shame on him for doing that.
Yeah.
To be honest, that's a complete slap in the face to the workers. I mean, get at the table. You got to be there in person, show your face. It kind of does. I wouldn't like that either if I was a worker. That's a slap in the face.
Yeah. No, and what these CEOs are making, some of them, and I don't want to discredit capitalism. Capitalism is great, but sometimes you have to just think, why are we paying our CEO $25 million plus a ton more in stock options and so on and so forth? Like, I don't know, is anybody worth 25 million? I mean, we can get into pitchers making 25 million, which is why I don't like baseball anymore, but it's obscene. It's obscene, and it's offensive to the people who are having a hard time making ends meet that work on the shop floor.
Yeah.
So you're right. There's work to be done there. I mean, you just have to respect people at the end of the day.
Yeah.
Right? You gotta negotiate in good faith and respect people. But when you look at, we want a 40% raise and we want to work 32-hour work week. I know part of that is based on the fact that EVs are manufactured much quicker, right? There's fewer moving parts in an EV than there is in an internal combustion engine vehicle. So they're thinking forward in that regard. But then you get into, like, are we really going to adopt EVs at the rate that we're anticipating? We could debate that for the next couple of hours as well, because I'm not so sure that that's going to happen.
Yeah, I would agree. There was one gentleman in Congress or something, and they were talking about EVs. So not just personal use EVs, but like the big truck EVs, and so the 45-foot trucks that move, basically just ship goods, the big ones that Tesla made, and a company had like 4 or 5 of them. And the city had to call, because they were charging the battery, the city had to call them and go, what the hell are you doing over there? You're using up way too much energy. You can't charge these batteries.
Yeah.
It's like the grid is not nearly powerful enough to support a 100% electric vehicle society. Not even close. Yeah. Will it ever be? I think that's the debate.
Yeah.
That we could have. We're not going to have it because it's a long debate.
But where does most electricity come from?
Well, exactly. So if you want to support all the electric vehicles and like the power grid to actually recharge the batteries, where is that energy going to come from? It's not all going to be hydro. It's not all going to be wind. It's not all going to be solar.
Coal and gas-fired turbines.
Exactly.
Back full circle to fossil fuels. So,
exactly. Exactly.
This is stuff where people are naive.
They don't understand it.
They're naive.
I think they don't want to understand it. I don't think that politicians and media want them to understand it. I think that's a very good point.
Because
as well.
What sells is the big bogeyman right now is the planet's going to hell in a handbasket. And we're not going to survive.
Yeah.
Every time there's a hurricane, it's the climate, it's fossil fuels.
Yeah.
It's everything gets tied back, and we're all afraid. New York City is going to be underwater. Miami Beach is going to be underwater.
Yeah.
Fires. The fires are all because of fossil fuels. Well, they're not, but the media. It's a great story. It makes people tune in, right?
Yeah.
The world's going to hell.
Yeah.
So
fear sells.
Fear absolutely sells.
Yeah.
Pays the bills in media. So, and it helps politicians too get votes.
I want to switch gears. I want to talk about oil. So I don't really know a lot about the oil markets. What's going on in the oil markets right now? So the price of oil is going up. That's all I know.
Yeah. Supply and demand, like anything else, is what drives any market. For the past, we follow the industry closely, by the way. Like we speak to people in Calgary all the time. We have great research, firms there that provide us with research and introductions to management. We meet with management of Canadian oil companies, and so we know the industry well. So for years they've been the bad boys, right? They're to blame for climate change. So it's becoming more and more difficult to build a pipeline. Nobody wants a pipeline in their backyard. People don't want to approve new oil sands projects or new, oil exploration. So the companies, finally realize, okay, so you guys are trying to put us out of business. This is like where it really starts. So we're not going to spend money on exploration anymore. We're just going to milk what we have now, and we're going to return as much money as we can to shareholders, and we're going to stop looking for new resources if you're going to make it really difficult for us. So this is what's happened. It's the philosophy has changed from spending on CapEx to find more oil to, well, we'll just either get more by increasing our methods to increase output, or maybe we'll take over a smaller company and buy the assets. But that's not good for the long run, because you're going to end up with less supply going forward. And energy needs globally are going to accelerate probably logarithmically for decades to come, because a lot of people around the world live in energy poverty, and they want energy. Like, they're tired of having a horse or whatever, no heating in their homes, no cooling. So demand for energy is going to go up, and that includes fossil fuels, which is the root of most energy, right? So to me, the supply-demand picture favors higher prices. Throw on top of that what's happening in Russia and the Russia-Ukraine conflict. So, Russia is, they just announced that they're pulling back exports on diesel, which will make it more difficult to move goods around the world. But that's, again, we're not sure if that's internal politics at play there. And then the Saudis are, they've announced again, like, cutbacks till the end of this year. So they're going to cut back production. So they're trying to manipulate the price higher. So there's a lot of factors at play. But bottom line is, we need more energy, not less, moving forward. A lot of electricity is derived from fossil fuels. So whatever side of the climate argument you sit on, we're going to need fossil fuels moving forward. And arguably 25%, let's say, of consumption of fossil fuels is used for transportation, like gasoline fuels and things like that. I mean, plastics, chemicals, fertilizers, it's all around us. Food, petroleum products are used everywhere in industry. Without them, we would be a less advantageous society. We would have much, much less. Medical devices are made from plastic that are made from oil. Roads are paved with asphalt, which comes from oil. And what's overlooked is the benefits that are derived from using fossil fuels to drive agricultural production. So if you go back 100 years, we had a horse and a cart to harvest food to feed the nation. Now we have industrial combines. It's an industrial complex driven by fossil fuels that can plant, harvest, and transport to nations that need, like African nations that need food. This can be done efficiently with the use of fossil fuels. So if you were to remove fossil fuels from that industry, the world would starve. Bottom line, that's basically a truth. It's a fact, but it's an inconvenient fact. Nobody wants to accept that fossil fuels are very good for the quality of life globally and the ability to feed the planet. You take that away, this is what you're gonna have a world where people will be starving. Not only that, you can't get everybody on the same page with stopping a senseless war in Europe, and you're going to try and get everybody on the same page with sacrificing for climate change. And this is where I get frustrated with the political attitude in Canada that let's stop pipelines, let's stop the oil sands, let's stop all of this because we're going to save the planet. Canada is 2% of the carbon footprint globally, and we're going to save the day. No, we're sacrificing our future, our schools, our healthcare system, all the revenues that drive our standard of living are going to go to hell because we are anti-oil, because we're not friendly to investment in fossil fuels. Now, I don't have an answer. Do I want the planet to burn? No. Is the planet burning? I don't know. I'm not a scientist. What I do know and what I believe is that fear sells, like we just talked about in the media. So that's a great story. It gets votes when you say, we're the Green Party and we're going to save the world because we're going to stop oil. Stopping oil production and consumption makes zero sense. You're going to really disrupt the well-being of the world. And that's just...
What do you think it is about Canadian leadership that doesn't understand the importance of energy independence, especially with everything that's going on right now geopolitically?
Yeah.
Like the US is reshoring a lot of their manufacturing, China's reshoring a lot of their manufacturing, India's reshoring a lot of their manufacturing. All the nation states, they're reshoring everything, and energy needs to be one of those things. I think it's very foolish for us, especially when the world is heading towards a period of conflict, or so it seems. I hope we don't have conflict. Well, there is conflict right now, but there's a good chance there'll be more conflict in the near future. This should be a time when we're thinking about our own safety, and energy independence is one of those things.
Yeah.
Like, what do they not get? Or do you think they're just so... I actually think they're evil a little bit, just because I know that they know. They can't be this stupid.
Yeah. I wouldn't say evil. I'd say self-serving. It's
That's
politics.
a better word.
It's
sure.
politics. I mean, we're fortunate in Canada. We have everything that the world wants.
Yeah.
I think we're number 3 in proven natural gas reserves and number 5 in oil. Like, we have it. We have it, but we make it difficult to harvest, which is a shame.
But just like it doesn't make any sense for, and I know you agree with this, but when Germany comes up with basically, and we've discussed this before, it comes up with a blank check to Canada saying, hey, we need natural gas.
Yeah.
And our government says, oh, we don't see a business case for this. And then, well, Germany needs natural gas one way or another. And if they're not going to use the natural gas, then they'll either use coal or they'll get their natural gas from another place like Russia. And I can guarantee you that Russia does not care about the CO2 emissions when they're extracting energy like Canada does. Yeah. So in the aggregate, it's actually worse for the environment that Germany doesn't get the natural gas from Canada. There will be more CO2 emissions go into the atmosphere in the aggregate if they purchase it from somewhere else besides Canada.
I agree with that.
And people don't recognize that.
100% I agree with that.
But it just shows you that they're full of shit. They know this. Yeah. But politically, it looks good.
Yes, 100% I agree with that. And it's a shame because it hurts. Again, we're going to circle back to this hurts investment in Canada, which hurts productivity, which hurts our standard of living. And you have to tie these things all together. And I listen, I don't want to see the planet burn.
No, I don't either.
You can, if you're open to science and fact, I mean, you can make a pitch that it's a natural evolution of the planet to heat up or cool.
Yeah.
Are we, we have ambitious objectives to reduce the carbon footprint. Yeah, that's great. But at what cost? Again, at what cost? Are we going to starve the world
and eat bugs?
And because we stop using fossil fuels, because innovation, I believe, will take care of this. You can't say
so do I.
By 2035 we're not going to sell any more internal combustion engine vehicles. Zero chance, in my view. Yeah. Zero chance.
Yeah, I agree.
Because it's nice to say now to get votes.
Yeah.
Wait till we get to 2033. And people go to buy a new car and you're told, oh no, you have to buy an EV.
Yeah.
Number one, I don't think there's any way we're going to reach the productivity required from the critical elements that go into battery production or the infrastructure to charge them by that time to be able to do that. That's very wishful thinking and probably has a political, rationale behind it. Because it's I mean, we're here to save the planet. We're going to save the planet for you. Vote for us.
Yeah.
As opposed to actually, we're destroying our economy. Vote for us. I mean, it depends what side of
I just feel like they could do a much better job on the pitch where, again, I'll just go back to Chamath Palihapitiya and the All In podcast. These guys believe a lot in clean energy. They do believe in investing in clean energy. But at the same time, Chamath, he always goes, yes, I invest in clean energy. Yes, I invest in solar. Yes, I invest in wind. I invest in all these things. But more importantly, I believe in energy independence. Yeah. And that kind of rang to me. I went, that's a really good way to look at it. So he goes, if we need to be extracting natural gas, which burns twice as clean as gas and coal, then that's what we need to be doing until we can actually, because whatever we need to do to be energy independent as Americans, we need to be doing that. And I thought that was a really good point of view. Correct me if I'm wrong. I think the U.S. is the #1 oil producer in the world.
Yeah, about 12 to 13 million barrels a day. And they export a lot. Number one exporter of natural gas as well, liquefied natural gas.
If we ramped up our production, could we get to a top? I think we're fourth as it is right now in oil production. But if we ramped up production, could we get to like ahead of the Saudi Arabia?
You can make that argument. You know, there's rumors that float around that the reason why the Saudis are, reducing the output is because they can't increase it anymore. Like it's, the infrastructure is aging. I mean, this is all kind of stuff that you read, conspiracy theories and stuff. But in Canada, like for example, as I mentioned, we follow the oil patch quite closely. So I think by the end of next year, delayed, no surprise there, with the Coastal Gas Link, which is the pipeline from the natural gas producing fields of BC and Alberta to the BC coast at Kitimat, there's going to be a liquefied natural gas export facility. This will allow Canada pretty much for the first time to export natural gas to anywhere but the US. Like we send all our natural gas to the US because it goes by pipeline. We don't have a seafaring way to send liquefied natural gas. The project is being built. But to build these projects, you've got to deal with environmental concerns, permitting, planning, approvals, First Nation cooperation. So, there's all these things that have to be done, and they're the right things to do. But it takes 10 years, at least 10 years to get these things off the ground. Yeah. So there was this funny saying that I heard last year was that, the best time to build these LNG exporting facilities in Canada was 10 years ago. The second best time is today. Like, let's do it. Like, let's get it going because it's cleaner burning than coal. Yeah. On top of that, prices for liquefied natural gas in Asia are, depending on the state of the markets, 6, 7, 8, 9 times higher than they are here because we have so much of it. Like we flare it, right? Like we just burn it away. Like in the States, like it looks like all these candlesticks, and if you're flying over like Texas, you burn it because what are you going to do with it? You got too much. You just flare it off. Now we've learned to liquefy it and export it to markets that need it, like Europe.
Okay, we're switching gears. Bill, the fund, your fund that you actively manage. Talk to us about that. First question, if you're allowed to say this, what's the return year to date? Are you allowed to say that?
Yeah, that's public information.
Okay.
Yeah, it's out there. You can Google it and see it. I mean, this year has been a good year. I think we're up we're up about 32% as of.
That's nice.
Yeah, it's beating the benchmarks by quite a bit. This month has been down about 4. Okay. But that's across the board. This is seasonally the weakest time of the year, end of August into September.
Has your fund, since you started it, which was 4 years ago? 4?
Started January 2019.
2019? Okay.
Yeah.
So has it outperformed the index since you started?
Yeah, it has. So the benchmark that I compare myself to is 50% the S&P TSX Toronto Composite Index and 50% the S&P 500. So it's North American based. It's half Canada, half US is what I'm trying to beat. So this year it's beating the TSX handily. Last year was not a good year, but last year was not a good year anywhere. I think we were down 21 or 22 last year, but we've recouped all of that this year. And, I am proud of the achievement. I think my clients are happy. So, I manage a stable of clients who are invested in the fund, and, my goal is, as well as myself, I always make it clear that it's the only place I invest is in either my fund or another Palos fund. I don't
You put your money
anywhere.
where your mouth is.
Yeah, it doesn't make any sense to go elsewhere. Why would I, that way my attention's on the fund because my money's there too. Yeah. That's number one fact. Number two is, I get the question sometimes, well, how do you do it, And people look at funds this way, whether it's a mutual fund or an advisor, is how did you do it? Like, okay, luck, you're in the right sector, you nailed a couple of stocks. So you have to be able to explain why you have a repeatable method to hopefully outperform the benchmarks, which is better returns for your investors, obviously, over time, right? Compounding especially. So I usually narrow it down to, number one is experience. Like I've been in financial markets for 34 years. I mean, I worked as a professional trader for 2 large Canadian financial institutions where the job was make money for us. Basically go into the markets, trade and make money. So you learn how to, avoid risk, how to create outperformance. That was your job. So trading basically came to an end because of technology and algorithms and high frequency and all that stuff, 10 years ago. And I evolved into becoming a portfolio manager that managed money on a discretionary basis. And the best way to do it, in my view, is to have a fund. That way, whether you have 10,000 or 10 million in the fund, you get the same treatment, you get the same pro-rated returns as you would if you own units, in a mutual fund. So I'm very motivated to manage the fund, and I really do that every day. Like most financial advisors, and there's some very good ones out there. I'm not like discrediting them or anything like that. There's great financial advisors out there, but they spend more time on, kind of the wealth management part or building their asset book, whereas I take the view that it's about performance. And performance is tough to sell because, research will show it's very difficult to outperform the markets. I would argue that, again, I guess I'm blowing my own horn to a certain extent. I have the ingredients that make me want to outperform. Number one is motivation. Number two is experience, the will to do it. I'm very passionate about it. And that's what I want to do. I want to use the tools that are out there to manage risk, specifically option strategies and stuff like that.
What are you seeing moving forward? Which sector do you think has the best chance of having a bull market over the next year, let's call it?
Yeah, that's a great question because this year, most of the outperformance was attributable to the Magnificent Seven, right? Apple, Google, Nvidia, Microsoft, the stocks that were the high-tech ones that bounced back from last year's lousy year. Yeah. Which again, were part of the reason why last year was a lousy year. So we made some really good returns on that. Tesla in that group as well. In the last 3 months, I've pared back a lot on some of those holdings to reduce the exposure to tech. I usually try and have a 20% maximum per sector. So there's 11 sectors that you can invest in. That's the in the market. It's like 11 different stock markets within the market, right? People say the market. Well, the market is really a collection of sectors, subsectors, and individual stocks. So I've been looking at this recently, actually. The stocks that have done poorly in this environment of rising rates probably have a likelihood of bottoming and maybe performing better as we go into an environment where rates will probably start going lower, being utilities and real estate. Real estate's taken it on the chin. A lot has to do with office, right? It's straightforward. People since COVID are not going to the office, and therefore rents for offices have plummeted. But real estate is strong. Like rental units is strong. Yeah. And then again, what market are the rentals located in? What jurisdiction? So that's where real estate to me is probably an opportunity. In my view, again, I like to use analytical tools that put the odds in my favor. So I'm not ready to pounce on real estate yet, but I'd say I'm talking about REITs, like publicly listed REITs, not buying properties. Utilities have really taken it on the chin as well, particularly in the renewables space. Because that was the flavor of the day, right? Back to climate change, save the world. We're going to invest in solar, wind, and hydro. Yeah. But with rising rates, it makes expensive to finance those projects. Yeah. So that's another area that could catch a bid and maybe do better next year. I think tech will always do well if you're in the right tech companies, the ones that make money, right? There's tech companies that will never make money in my view, and then there's the solid ones that will. They're dominant.
They make so much money.
They've got such a moat around them.
It's crazy. Like Google, when you just look at Google and Apple and Facebook, just the amount of profit these guys generate, it doesn't, it's mind-bending.
So we own those. They're fun.
It's mind-bending.
And, you can trade options around those too because it's a very liquid options market, and there's ways to use options to manage risk. But Google, Meta, which is Facebook, Nvidia, Microsoft, Apple, those companies. Tesla, I'm off. Like we had a great return on Tesla last year because I bought it, I think in December, January when it was at the bottom. Yeah. And it basically doubled over the course of the year. But I'm just uncomfortable with Musk.
With Elon.
Yeah, he's just, he's a brilliant human being, obviously.
Yeah.
But he does things sometimes that scare me as an investor. So I'm kind of off the Tesla boat right now. Great company, but,
He doesn't care about what investors think. He's going to do what he's going to do.
Yeah, which is not always the right thing. There's a lot of money comes from endowments and pension funds, and if you don't meet certain standards of conduct and ethics, and he says things off the cuff that have been harmful in the past, and so people tend to shy away from, because you never know what he's going to say, and the stock goes down 25% on something stupid, right? Like, he could argue that Twitter was a bad move. I don't know why you would buy a brand like Twitter and then change the name. It seems like strange marketing strategy to me, but maybe he knows more than I do.
I love the fact that he bought Twitter. I thought not from a financial perspective, because I don't think he bought it to make money on it. Obviously, he wants to make a bit of money on it. I think he bought it more because he truly felt free speech was under attack, and Twitter was viewed and still is viewed as the digital Times Square. And in a Times Square, you should be able to say what you want to say. You should be able to have free speech. And I think he was actually just trying to protect free speech. I honestly believe that. Some people don't believe that. No, some people don't believe me.
I can appreciate that for sure.
I think
if you look at what's going on in Russia right now.
I think he did it as a sense of duty. I honestly think that's what he did.
Like their platform in Russia, I forget what it's called.
I'd say most.
You can't say anything.
I'd say most platforms are like that, where you can't say what you want to say anymore.
Yeah. So free speech.
Canada's getting important. Like that a little bit, in my opinion, kind of little.
Yeah, sometimes you can't say things in public in a social setting because you get that look. Oil would be one.
Yeah.
Like if I'm at a certain barbecue or cocktail party and I bring up my views on how we absolutely need fossil fuels to maintain our standard of living and feed the world.
They get mad at you.
Well, they don't get mad at me, but like I'm an idiot. But the planet's burning. Hey, I don't know the answer.
Do you find it a little bit arrogant? I remember one of my buddies, I was mentioning all the points that you just mentioned about oil. And then I said the 2%, well, Canada is only responsible for about 2% of carbon emissions, and China, we're basically a blip on the whole entire thing. And, with India and China ramping up production, and they're going to continue to increase their CO2 output. And his answer was just how naive it was. He goes, well, we should sanction them. And I went, Canada's going to sanction China? He goes, no, the U.S. I go, and China's going to listen?
Yeah.
But it's like, no one wants to change. I guess the point, I'm giving a very bad example, but the point that I'm trying to get to is a lot of people want other people to change their lifestyle, but no one wants to change their own. If you want to go live in the woods and eat bugs, go for it. If you want to truly stop the world from warming up.
Yeah.
But that's just not going to happen. So stop. These are for the leaders. Stop flying around in your private jet everywhere, lecturing us on how important climate change is.
Yeah.
It's very frustrating.
Yeah.
And no one wants to change their lifestyle. They want other people to change their lifestyle first, not their own.
Like truth and transparency would go a long way. Like, what is the truth? What is the truth? Like, how is climate change? How real is it? How seriously dangerous is our future? Is our existence threatened? Because with climate change and with lobbying and research, there's a lot of,
because they lobby too. The green energy sector, they lobby too.
Hey, if I'm a research guy, I want free money from Ottawa to research the impact of climate change on wheat. There's money in that. Like
solar, all the clean energy. This is an industry in itself. These guys lobby, just like the oil industry lobbies, just like telecom, just like tech lobbies to change laws and rules and regulation. The green energy sector does the same thing.
Yeah. Hey, solar and wind and hydro are great, but if the water's not flowing because levels are low, if the sun's not shining and the wind's not blowing, which is what we saw happen in Europe last summer, you need a backup. You need a backup, otherwise your office is going to be 110 degrees and you're going to be cold in the winter and you can't store food. And it's like reality, right? There's reality, and then there's this, ulterior motive behind climate change and how to monetize and how to make money from it. So there's really a challenge to transparency in the whole thing, in my opinion.
And this is why I like having honest conversations with people like yourself, Bill. I think this is a perfect place to wrap it up. So we got Bill Mitchell. I always want to say Bill Withers. I don't know why. Bill Mitchell, Palos Wealth Management. I really appreciate you coming on. It's the second time coming on. Great conversation as always.
Yep.
And this is the Freemium Podcast. If you guys liked it, feel free to subscribe, smash the like button. Thanks for tuning in. Thanks, Bill.